Yeah, all good.
Pardon? Yeah. Yes, yes. Hello, everyone. Yep.
Yes, I'm here. I can hear you, Anton.
to investors, or perhaps you want to know what is the right investor for you, or whether you should actually go to an accelerator or an angel, or maybe a VC. Maybe you want to know how to actually go about getting your pitch deck together, or maybe prepare for due diligence and all that jazz. Literally, as I said, there are no wrong questions, and there's no need to be shy because it's a learning curve for us all. In terms of today's agenda, it's going to be quite simple and straightforward. We'll go through some quick introductions, then we'll open it for questions then we'll ask the amazing panelists we have here with us today for their main do's and don'ts when it comes to early stage fundraising. And then we'll go on to your questions. Now, a quick reminder for those that are on the live streams, whether you're on LinkedIn, YouTube, Facebook, or Instagram, please be aware that unfortunately we are unable to monitor your questions there live. So if you do want to ask our team anything, you would have to join us here on Microsoft Teams. It's audio only. And the quickest way you can do that is go to our site, startuptoscaleup.club. You scroll down a little bit rather on the site, and you'll be able to easily find Startup Fundraising Q&A 153. You click join. A quick registration will get you a link to your email, and through that link, you can then tune in to our audio only call. Being audio only, it means you can join from anywhere via any platform or device. And also, if you're like me, for example, being on a hospital bed, you don't need to worry much about people seeing you. Now, once you're here, simply drop your question in the chat. We'll give you the mic, and then you can take it away and ask whatever question you had typed. So, without further ado, we'll start with some introductions. My name's Anton Call. I'm an Albanian in London working with startups normally right after they get investment. I embed within their teams and help them hire and keep the right people. I also do some growth advisory work with a few other startups on accelerators and help some angels and family offices with their due diligence and assessments. I guess in terms of order of things, we can start perhaps with Angelica, then we can go to Hannem, then Carol, and last but not least, Oscar. Introduce yourselves, please, team.
Hello, everyone. This is Angelika Burawska from SFC Capital. We are one of the leading SCIS and EIS funds investing in early stage startups in the UK alongside British Business Bank and angel investors. So we've invested in over 500, probably coming to 600 businesses. Some failed, some were successful. So we've seen it all. Thank you.
Hi, this is Hannem Dogan Jane. Oh,
no, carry on.
can you hear me? All right. Yes, that's me, Hannem. I am an exited founder turned investor. Currently, I sit on the other side helping founders with investment, with growing their business, with scaling up or international expansion. Thank you.
Hello, I'm Carol Hilsum. I have had over 20 years in an operating career building and scaling great businesses from early seed all the way to IPO. I'm then a turned corporate investor, investing in over 40 companies, acquiring 3 of them and building growth strategies around those companies into millions of pounds of value. Now I lead Assembly Ventures. We run an angel group called Future Consumer, which is over 200 angels investing in the future of consumer, both consumer brands and B2B companies that are helping to support their growth. We have invested in about 6 companies in the last 10 months, deploying just over $1 million.
Hi there, and good afternoon. My name is Oscar. I'm 37. I'm English. I've lived in London most of my life. I am a principal at Edenred Ventures, which is a 175 million euro AUM fund focusing on European B2B SaaS. Key topics are future of work, decarbonisation, but specifically EV transition, commerce tech, and fintech. So I'd be delighted to answer any questions you have today.
Well, thank you very much, team. I really appreciate you joining us today. Well, you've heard them, team. We've got some brilliant panelists with us here today, and it'd be a shame not to take advantage of their experience straight away. So my advice is, if you are here on the Microsoft Teams call, don't leave it for last minute to drop your question in the chat if you've got any questions for them in terms of your fundraising journey, and then we'll give you the mic. We are wrapping this up at 1 o'clock, so only 15 minutes to go. By the way, we've had over 280,000 people that have tuned to these sessions in the last 4 years and a bit, and none of that would have happened without our panelists, without people like Angelica, Carol, Hannah, and Oscar. So if they'd like to drop their LinkedIn URLs in the chat, and maybe just a couple of words, well, they've introduced themselves anyway, so just the LinkedIn chats would be fine in case anybody wants to reach out to them. Please feel free to do so. Now, I'm sure in all the work and the amazing stuff you do, you often see stuff that you find quite horrible in terms of a founder's journey and how they do things, but you probably were also impressed. But at the same time, when it comes to investing, you may have certain things that would make your life easier as an investor to decide for a yes or to help the founder. So with that in mind, if we can have a do and a don't from each of you, we'd appreciate that. And if we can try not to use the same logic for both, please. What would you say is one do and one don't when it comes to early stage fundraising? Maybe we can start with Hannah, then Angelica, then Oscar, and last but not least, Carol, please.
Yes, I'm here. Great question, Anton. And I think if you look at LinkedIn and other media, you'll see that this is a really hot topic of people sharing their do's and don'ts. For me, and I go back to the time that I was a founder, I think one of the don'ts is probably looking desperately for an investor at any cost. So not looking at an investor in terms of, are they going to add value? Is it the right investor? Is this what I need? Is this what the company needs in terms of, giving equity away? So I would say don't react and just take on any investor. And the do's is, I think, do also think of long-term exit strategy. I think this is what's really important, even if you're an early stage pre-seed, already to have a vision of where you want to go. And then when you sit in front of investors, because they want to see their return, you can talk about that. Thank you.
Hi. So don't mass email investors. I still see it. Founders sending their deck to hundreds in copy, hoping that someone will respond. Doesn't work this way. Also, don't ask investors to call you to discuss your idea. It's not how it works. There are, particularly if it comes to professional investors, institutional investors, there are processes that have to be followed, because otherwise it's very difficult to review an opportunity. So don't do those two things. What to do? Focus on team and execution more than the idea itself. Ideas are not worth a lot it's not really worth protecting them, overprotecting them when approaching investors for the first time, because we have seen them probably many times in different iterations. What matters is really who is behind the business and how that idea will be executed on a given market. And telling us that the market is huge, yeah, most are probably. So it's really about execution and who's doing that. Focus on that.
And my do will be, do know your numbers. There's a misconception that venture capital investors give out money off a good deck or a good kind of warm introduction. That's absolutely not the case. We have many cases where founders do not know simple things like cash burn, runway, key KPIs that will get them to the next round, even things like EBITDA margin of your business in years 4 and 5. Investors want to know how you will generate cash, and we're past the stage where, unless you go to the West Coast, where big ideas just take funding. So please be clear and know your numbers. And you wouldn't give a Formula One car to someone who didn't know how to drive. So you wouldn't write a check for 3 million euros unless you knew someone who was financially literate. And on the don't side, I would say don't necessarily focus on VC funds as your funding partner. VC funds work for a minority of startups for reasons that we can delve into, but I think there are many easier and more suitable ways to raise money for most startups in the UK. I really do, and those can be family offices and angels, etc. They are much less exacting. Their terms will be simpler. Their terms will probably lead you with more equity as well. So I would consider other routes, not just venture.
Hello, so I think that leaves me. In the same vein, do really deep research on what you're wanting to build. As has been alluded to, there's a high expectation of founders to have really thought through the business that they are currently building or wanting to build into, on the financials, etc. as well. But one thing I find often quite lacking is people doing any real due diligence themselves on the area that they're building into. So for example, from a SaaS perspective, maybe you are able to build a certain service, but have you really thought about all the other people that have built into those services, how the clients that you're trying to sell to are currently fixing those problems? Do they have budget to fix those problems? What have been the nuance and the deeper challenges within that space? It's not enough just to mock up some digital examples on a spreadsheet of, for example, in my space, a virtual try-on solution. And that's enough. You have to really deep dive into that space and the challenge of the industry and what's worked before and what hasn't worked and why they would want to invest in further tooling in that area. So definitely deep research before you even start to have discussions about investment are really, really important. Don't expect the investor to do that for you as well. Sometimes there seems to be an expectation to have calls with investors who will tell you about the space that you're building into. And then really important, I talk particularly from an angel space, don't think that angels are just free cash. They are a very particular type of funding, and that's really important. They're a very valuable part of the ecosystem, but they're not just people that want to just give you money. They're not sort of an easy ticket, which I think is often the thinking behind it. These are people that have built up their own wealth in particular areas. Many are ex-entrepreneurs or maybe ex in finance or of other areas of expertise. And so they are expecting a very high level of due diligence and positioning to them as well. Quite right, Oscar, quite differently. They look at things differently from a VC, but they're not just someone that's there to give you £20,000 with no questions asked, for example.
Well, that's some amazing advice, and I really appreciate all 4 of you for that. Well, I guess it's time we go on to some questions from the audience, from the founders. But just a quick reminder to those of you that have just tuned in, This is Startup Fundraising Q&A. It's our 153rd session. We've got 4 brilliant panelists, all investors with us today, and they're willing to take any questions you may have when it comes to fundraising. So just bear in mind, there are no wrong questions and there's no need to be shy. It's a learning curve for us all. So if you've got any questions to do with anything related to your fundraising, whether it's investor outreach or pitch decks or data rooms or even valuations, due diligence, grants, angel investors, VC, corporate VC, crowdfunding, exits, and all that jazz, please feel free to drop your question in the chat. We'll give you the mic and then you can ask the team. If, however, you are on the live streams, whether that's LinkedIn, YouTube, Facebook, or Instagram, please be aware that unfortunately we're unable to monitor your questions there live. So you'll have to join us here on Microsoft Teams. It's an audio-only call, which means you can tune in from anywhere via any platform or device. And the quickest way to do that is go to our website, startuptoscaleup.club. Scroll down a little bit, you'll find Startup Fundraising Q&A 153. You click join, it's a quick registration. That gets you a link to your email, and through that link, you can then automatically tune in here to our call. Once you're here, and for those of you that are here already, please drop your question in the chat. We'll give you the mic, and then you can ask our panelists. We're only going to be here for the next 40 minutes, so there's only so many questions we can take, and my advice is don't leave it for last minute, because then we do run out of time. And also, just one last thing, in case your questions today are not around fundraising, please save them for the other conversations we have. On Mondays, it's talent, Tuesdays, product and tech, Wednesdays, growth, Thursdays, fundraising, second Friday of each month, it's UK startup law, and third Friday of each month, it's UK startup finances. They're all from 12 to 1 p.m. UK time. And you can register to any future ones via our site, again, startuptoscaleup.club. And actually, when you go there, what you might want to do is at the top and bottom of our site, there's a WhatsApp icon. You can join there and connect with other founders, investors, operators, our brilliant panelists and mentors. And you can also send questions ahead and all that stuff that people do in a highly curated community. So without further ado, we'll go on to our first question. I'll read this out loud, and then it's in the chat, but if the panelists want to read it themselves, please feel free to do so, but I'll read it out loud for the live stream. So this is from an online therapy platform founder. She's based in Bristol. They're at seed stage. She's got a psychology background. And she says, we're building a teletherapy platform and considering demo days to showcase our product. How do I create a demo that clearly demonstrates our value proposition and attracts post-demo follow-ups from investors, particularly those unfamiliar with the mental health tech landscape? Right, well, I'll give you my quick 2 pence, then pass you to the specialist. But my advice is, why do you want to go after, or my question would be, why do you want to go after investors who are unfamiliar with that world? I would strongly advise you actually go after the ones that know this world a little bit better. But nevertheless, maybe we can start with Oscar, then we can go to Hanem, then Angelica, and last but not least, Carol. Please, if we can take about a minute each, team, that would be great.
Sure. Thank you very much for the question. Firstly, I'm going to start by saying that the mental health tech space is incredibly crowded, incredibly competitive, and I would be highly wary of it because, I mean, just easy peasy, if you look at the number of unicorns in the space, whether it's Cerebral, BetterUp, Calm, Modern Health, Elderme, Maven Clinic, which is for women's and family mental health, these are hugely funded. And I think it's very, very difficult now for startups to play in this space. And a lot of the money is coming from the States to the UK to Europe. So BetterUp is an example of that. It's kind of coaching and behavioral health. So I think it's a very difficult space in terms of making the demo kind of interesting for investors. I would make it very clear and very short. and I would show kind of clinical evidence or really credible evidence of the problem that you're solving. So the experience they have, and then really try and show the outcome that your technology delivers. And I think with mental health, that is very difficult in a short demo, because the mental health is a very personal thing by its very nature. But I would try and really show the outcome that your technology gives.
I think, Anton, first of all, what you mentioned was the first thing that came to my head as well, like why go after investors? Nevertheless, the two important things, and they are quite practical. First of all, if you're going to do demo days, and not just virtual, but in my experience, especially over the last couple of months, in 2025, people are really in favor of face-to-face demo days. And if you have a chance to do that, to organize that, I think that would be really good. I see more and more startups doing that. It's not an easy thing. It probably costs a bit as well. Maybe you could get a sponsor in, but in person, inviting investors and having a small group of people that are interested in your product, in your startup is really good. Secondly, I would also say that although the health space is really crowded, what is a hype at the moment is femtech, focused on, there's a lot of attention going to female health. I'm saying a hype, but there's advantages and disadvantages to that. So I would say play into that field as well. Look at investors, either that's angels or early stage VCs that are in that space. Thank you.
Hi. There are two things I would mention here. So the first one, at seed stage, you are often targeting generalists, investors who, like us, invest across the board. I don't know how many specialists there are that are ready to invest at seed stage. So it's true that there will be some investors who are not particularly familiar, but not because they don't know the space. They are simply generalists, and they will not be looking for you specifically. And because of that, a demo day, in my opinion, should be directed to your audience, to your customers. And if you demo to customers and those customers follow, and you can show that you can build traction, that's the best way to then go to investors and show them that this product can gain traction. Because in the end of the day, the product is not much, it's what you can do with it, who you can sell to, and in particularly in a crowded space, you have to prove that this can sell. So I don't think investors at early stage will just come to a demo day of a single startup. You have to go to them and prove what you can achieve, and that's really with showing commercial traction, which can be achieved through organizing demo days.
Thank you very much. Just to clarify, Angelica, and actually I would love to maybe ask the others after as well. Are you saying that from what you've seen lately, founders need to go beyond demo days because investors aren't really going to engage just because they've been at your demo day? Is that
yes,
right
I
assumption?
think that there are so many startups that are fundraising that waiting for investor to come to your demo day, it's probably not the best strategy, because we startups come to us, and there are enough startups, entrepreneurs coming to us to speak to. It's very unlikely that we'll be hunting for entrepreneurs by spending time on their demo days, particularly early stage. I think it's the other way around. I'm not saying that it's not impossible, that it is impossible to attract investors to a demo day of your product. Specialists probably are more likely, But again, at seed stage, you will have more generalists that are available with funding. Specialists often come later when you've got that first round done, and they are more, at least in my view, I might be wrong, but from my experience, specialists like to see companies that are already at certain stage, and to get to that certain stage, you need the first funding round, and that will often come from generalists, and generalists are generalists because they have to spread the risk. So it's a funnel in a sense.
Makes sense. Thank you very much. And sorry to interrupt. I think we had, was it Carol or Hannah after?
I think it's me now. So yeah, I
Please
agree with, oh, sorry, can you hear me? Okay, so I agree with everything that's been said. I wonder whether you are at seed stage and maybe pre-seed stage, where you would be more looking for very initial funding to maybe build the platform initially to take it to market. I totally agree that demos are far more around selling tools to your potential market rather than for sort of real investors in the space. It would be very unlikely, I think, for a lot of investors to go to a demo day. I think, again, what's really important at this stage is not that you can build a digital product, because essentially building digital products is highly available to people through your own means, through different tools, or by finding and paying for someone to develop the tool. So it's far less about impressing an investor that you've built a digital tool and that you have come up with a great new concept of a business that you yourself will be best placed to bring to market and succeed. I would say there's very few investors that won't know about the health tech landscape. It's been an ongoing conversation for a few years now within the investor ecosystem. And so it would be a surprise if investors knew nothing about it at all. So again, I think I would go back to what you really need to be showing to investors at this point is your specific concept, why it is unique, why it needs to be built, why you need to build it, and how you plan to take it to market. Again, the big thing that shows is the difference between success and not success in this space is, of course, it's a specialized service and experience, but you're trying to connect to people that in a very, very busy digital consumer space. So what they'll mostly be looking at in this kind of area is how you would actually take it to market, and how you would manage to stand out in just a very busy place. So how do you build network and community? How do you get your message across? That kind of thing. That's what we're kind of looking for to stand out in this particular space rather than a working demo.
Thank you very much for that, Carol. Thank you very much to everyone. Zara, are you audible? Zara, can you hear us? I've asked a question in the chat and I've given you the mic, so just making sure that you can ask the question. You can hear me, right? Are you able to unmute? You're probably on a... I see. Okay, let me make you a presenter because you're probably on a... yeah, you must be on a browser. Yes, now we can hear you.
You can hear me, okay. Yeah, sorry about that.
Yes, we can. Please introduce... That's okay. Please introduce yourself and then fire away with your question.
Yeah, hello everyone. My name is Zara. I'm a startup founder. I'm developing a mobile gaming app for those who are interested in fashion and who play puzzle games. My first question is, what are the top 3 founder attributes which you're looking for in founders and without which you simply would not invest if the founder didn't have those 3 attributes?
Thank you very much for that, Zara. Zara, two quick questions, if I may. Number
Sure.
one, where are you based? And
I'm based
number
in
two,
London.
in London, perfect. And number two, at what stage are you at? What I mean by that is
Seed
one,
stage.
seed stage, i.e., what have you built anything yet in
Yes,
terms of?
I have built. Yeah, I have built. The app is in the App Store. I'm testing it. I have
Okay.
bootstrapped the pre-seed round with
Okay.
my own savings and selling my car and so on. I'm at a stage where I need to iterate further, and I've run out of funds. So the way gaming apps work is you need to iterate, build something, test, build, test, build, test until you arrive at the right retention metrics. So day 1, day 7 retention metrics are the key metrics for mobile gaming apps, and I would even say any kind of consumer app. So that's what I'm trying to achieve.
I hear you. And part of that question in terms of what stage you're at is, how long do you have fuel to keep the lights on? I.e., how long can you keep this without raising no funding? And two, what team do you have around you today?
Okay, so how long do I have to keep the lights on? No long, I would say. So yeah, I've burnt my savings completely. What I'm trying to do
Are we
at the moment,
talking weeks or months or?
a month or so, basically. What I'm doing is I am using now AI, and also I'm upskilling myself with AI so that I don't depend on contractors and I can do certain things myself, which aren't dependent on funding. But having said that, developing a mobile gaming app is a multidisciplinary product. So you have to have different types of expertise coming together to build it. So far I've done, now in terms of team, I've done a lot of things myself, and I've hired contractors who do C# programming in the engine that the game is built in. So Unity engine, you may have heard of. So yeah, so I don't have a permanent team at the moment. I had a potential co-founder who has gone on maternity leave, so we'll see what happens next when she's back. Other than that, I have used contractors to progress with my prototyping, and I paid them from my own savings.
I hear you. Okay, thank you very much for that. Right, well, let's hear it from the investors first, and then maybe I can add a little bit at the end. How about we go on to Angelica, then Carol, and then Oscar. If we can keep it to about a minute each, team, that would be great.
I'm really sorry, but I think I lost the point. What's the question?
Yeah, the question is, what
That's
are the top 3 founder attributes that you're looking in a founder? Say, I don't know, resilience, whatever, conviction. You know, different investors have their own picture of what the founder should be. What are the 3 key attributes that will drive the business forward and make it successful? And it's very much dependent on the personality and the attributes that the founder possesses. So what are those 3 most important ones for you?
Oh, this is not an easy question to answer, because whatever answer I will give you, it's very difficult to verify unless you see some traction. So yes, of course, we are looking for hardworking individuals who show persistence, who show they will be fighting for it, will not burn out. And as much as we try to figure out if that's the case, like initially there is always enough enthusiasm from entrepreneurs when they come for fundraising, that it kind of, you verify really other things. It's more a negative selection. So if you see red flags, that's easier than to verify and confirm that they have the resistance and the fighting spirit and all that. Even if we are looking for it, like, you don't have really ways to say, okay, they tick in early stages. It's more to, we look at traction, right? We look at what you have achieved, and does it prove that you have those qualities that are necessary to build a company? It's a tricky question, because whatever we will say, like, yeah, it's obvious, 2-3 attributes, but can you really execute that? That comes down to what you come with when you're approaching investors, the evidence of that. And the evidence is typically the more traction you have, and if you can prove that you can build a team around you, because running a business is not an easy way, it's not an easy thing to do, then it proves that you might have the qualities of an entrepreneur, but it's never guaranteed until the later stages when something happens then.
Thank you very much, Angelica. I think we said, did we say Oscar or Carol? I can't remember. Either of you, please.
Carol, go ahead and goes third.
Oh, I go? Okay. Yeah, as I said, it's very difficult on an attribute level to make that judgment, or certainly to give that advice. I think as stated, from an investor level, what they're looking for is making sure, the most important thing is, one, the founders have a good chemistry themselves. They seem to get on. There's clarity about why they're building this thing together. And then the other, more from a legal perspective, is that they have clear contracts with each other, clear shareholder agreements, that the vesting makes sense between the founding team as well. That would be the main things that people would be looking for. They would also be making sure that skill sets were a nice complementary skill set to each other. So from, very simple one is one technical, one commercial, or there's various different versions of that, though it doesn't have to be that kind of split. And yeah, I think they're the main things that people will be looking for.
Thank you very much, Carol. And last but not least, Oscar, what do you look for?
I would say probably the most important trait will be really resilience, and following that, I would say the ability to pivot. Lots of our great companies started off with a very different vision and a very different product to what they have now. Our unicorn is a company called Beamery, and that started off really in a kind of recruitment space, i.e. kind of funneled candidates, and it's now very much kind of not that. It's an internal kind of workforce analytics tool. So that'd be number one. Number two, I think, is this word credibility. And back to my phrase earlier, you wouldn't give someone a Formula One car if they didn't know how to drive. So you would only back a founder if they were really an expert in their field. And that credibility not only is on the technical side, but also credibility in terms of fundraising. Lots of people we find can go out and raise 4 or 5 million euros, lots. What very few can do is go and stand in front of Accel or Insight or Creandum or Felix Capital and raise 20 or 30 or 40 million, So I think that credibility of the founder to not only raise the baby rounds, which are pretty straightforward, but be able to stand in front of a big, greedy US capitalist and raise the big money as well, because the little VCs also want their return, and they're only going to get their return if the founder they back can get the follow-on round from one of the big boys.
Well, thank you very much, team. I guess to wrap it up, what I got from them, Zara, is that it's more for you to, when you don't have traction, it's more for you to focus on de-risking it as a founder. So as much as the founder can do to show certain traits that would de-risk their investment and obviously translate into convincing them that they'll make their money back. That's the idea. One thing I would strongly advise you to do is find a co-founder. What is your background, Zara?
My background is banking.
it. So I'm assuming you're not a developer, right?
No, I'm not, but I've been developing for 5 years now, so kind of I am already.
Very good. Very
Yes.
good. That's brilliant.
I have become
So
one
the
already, so yeah.
That is brilliant. So that's where I'm trying to get to. If you can find a co-founder that will complement what you lack, whether that is the development side or the commercial side, or perhaps specialty in the field, I don't know, a fashion buyer or somebody that will open doors, that's how you tend to de-risk this. So my advice is this person who's gone into maternity leave, unless she's expecting to give birth next week, you tell her to change stuff on her LinkedIn, or she doesn't have to, but the point is you get her to say she's going to start being a co-founder from tomorrow. Otherwise, you move on and you find somebody else. That would be the best advice I could give you in terms of kind of get into that next stage. And I have to say, at this stage you're at, with that little runway that you have, it's not going to be easy. So you, going back to Oscar's point, you need to find ways to pivot whatever you have so that you can keep your lights on for a bit longer. At the moment, so it used to be a case of about 6 months for a raise. What I'm seeing now is sometimes even a year or 18 months. Sometimes. So it used to be 6 months. Now I'm seeing anything between 6 months to 9 or even a year in some cases that it takes to raise money. So that would be my advice. I hope that helps. And in terms of gaming, if anybody here, the 3 investors know one investor in gaming or know anybody, please feel free to let Zara know if you do. And then since you've got the LinkedIn URLs in the chat, perhaps Zara can reach out to you and take it from there. I hope you found that helpful, Zara.
Yes, and can I also ask a follow-up question to Angelica?
Go for it.
If I may. Yeah, it's just because Angelica said that they're generalists and they invest into multiple industries. I'm just wondering, as a generalist investor, how do you assess the specific project, specific business or startup to understand the nuances, because each business has, nuances that you need to be aware of. And if somebody, for example, let's say if you have never invested in gaming businesses, somebody comes to you and says, look, we have great traction and so on. How do you approach assessing them if you're a generalist? Do you involve an expert in that area to advise you and just to do the project due diligence, like the subject matter due diligence? This is what I always wonder when investors are generalists, how they approach in assessing the potential, because you need to know the nuances of the business to be able to assess the potential. You need to know the stats, the numbers, how that industry developed, where it's going, and so on, as well as being aware of the risks and ups and downs associated with each industry. So how do you approach that assessment?
Sure. So we have a scoring system in place, and that scoring system is basically a number of areas that we are assessing, and based on what the answer to each assessment area is, it gives us a score. So in the end of the day, the assessment comes with a score that is objective. And the objectiveness comes from the assessment of, for example, team. How many team members are there? How are they compatible? Do they cover different responsibilities, different expertise? So if you are a solo founder, you will not get a lot of points for that, because you cannot cover everything in the business. You can't cover development, sales, marketing, customer support. So this is just an example. So there's a number of areas that we cover. And even though we are not specialists and we won't know every topic to the very detail, we do have an idea, obviously, and we do ask questions and we assess how credible the answers are. With more complex more complex projects, more specialist projects, and I'm talking here more about life science startups, we might reach out to a network of experts that we rely on. But I wouldn't say gaming is specifically difficult to understand. It's easy to find reports and find information, and as we analyze startups from the same areas all the time, we have that internal knowledge. And so at early stages, it's the scoring system that assesses different aspects of the business, such as team, such as traction, such as valuation, and we get and due diligence asks more deep questions. And we obviously as well do some technical analysis of the product as well. Again, depends on what it is. We can go deeper or not as deep, because every startup is different and they come at different stages to us, even if you're talking still seed stage.
Okay, thank you. Anton, may I ask another question? Sorry.
Not today, Zara.
Not today. Okay, fine.
We'll go to another. Not today.
I'll keep it for next time.
Thank you very much for your questions. I really appreciate that, and I think you've got something there. It's just a matter of how you take it to the next stage. That's that. Every startup I've been in, whenever I've focused on going to the next stage rather than try and do everything, that's when I had more success. So that would be my sort of last advice for today. That's okay. Is that all right?
Thank you very much. Yeah, thanks a lot.
Best of luck, and please do feel free to join other sessions we run. And that's just a reminder for everybody else here. We run 6 regular sessions: Mondays talent, Tuesdays product and tech, Wednesdays growth, Thursdays fundraising, second Friday of the month it's UK startup law, and third Friday of the month it's UK startup finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our site, startuptoscaleup.club. When you go there, simply pick whichever session you want, click join. It's a quick registration that gets you a link to your email, and then you, through that link, you add it to your calendar basically, and you can join us. For those of you that are on the live streams, whether you're on LinkedIn, YouTube, Facebook, or Instagram, please be aware that unfortunately we are unable to monitor your questions live there. So if you do have any questions, you'll have to join us here on Microsoft Teams. And again, the quickest way to do that is simply go into our website, startuptoscaleup.club, and through that you can then basically join today's session, which is Startup Fundraising Q&A 153. Just scroll down a little bit and you'll see it there. Joshua, I've just given you the mic. Are you able to talk? Are you audible? You've asked a question in the chat.
Hello.
Yes, buddy. Please introduce yourself, and then let's try and keep it to about a minute for both questions and answers from our amazing panelists. So go ahead.
Okay, thank you, Anton. So hi everyone. My name's Josh. I'm the founder of a company called Sabor Applications, or SAL, as we're better known. And basically, my question is I was never looking for investment initially. I've been bootstrapping the whole way. But something interesting has happened where a very close customer has actually asked to invest. He knows my pipeline. He knows my situation. He actually sponsored the first club app that we made for a local football team. So he's very integrated into current situation that I'm in. So my question is, how do I value basically his investment? Do I use the company's value today, or do I use sort of pre-money next 12 months pipeline for the valuation? Obviously, it could be worth more then. It's worth less now, but I just want it to be fair, basically, and not undersell or oversell. Because like I say, it's a very close relationship, and he's come to me, which I think is sort of the perfect kind of storm.
That's a brilliant question, Josh. Josh, 2 quick questions from me. Number one, where are you based again? And I'm sorry, because you've been here before, but I just couldn't quite remember where exactly you're based.
No, that's okay. Based in the Northwest.
Northwest, brilliant. And what stage are you at with your business? I.e., Is there a monthly recurring revenue? Where are you at, and how big is your team?
It's only me at the moment. Recurring revenue is very small at the moment. Like I say, it's bootstrapping. It's about £130. But
That's okay.
the situation we have is that we license the software. So the more customers we onboard, our basically overhead doesn't increase. It's very, very fine.
Tell me a bit quickly about what is it you do again. I'm sorry.
It's okay. So basically, we make white labeled apps for SMEs, and now we're pivoting to sort of focus on community apps as well, like the football teams. They're very popular. The first one we did was very successful.
I hear. Okay, brilliant. Yeah. Thank you very much. I'll give you my quick 2 pence at this moment. One, well done for kind of impressing that client or that person so much that they've come to you. Number 2, it's an art. It's not a science where you're at. So what I would do is think, how much money do you want to take from this person? And if they agree, and then you kind of pretty much then are doing that times 5. So let's say they're investing 100K and they probably want from you anything between 10 to 20%, then your valuation would be, let's say, £500,000. Does that make sense? So don't focus on the valuation. Focus on how much money you need from that person in order to go to the next stage, and then you can work it out from there. But I'll let the experts have a go at it. So maybe we can start with Carol, then Angelica, and then Oscar, please.
Hi, so yeah, it probably depends on a few different things. So I don't know how much they've shared with you in terms of the kind of ticket that they're looking to invest, the terms that they're looking to invest under. Do they want to be an SEIS investor, for example, where you would want to have some level of pricing as well as you go through the approval process? And also it depends on your own aims for your business. Are you wanting it to be £100 million business, or are you looking to keep it quite small but garner a good level of margin for yourself and your investor as well? So there's probably a couple of questions there, just more about if he has or she has given you any indication about the investment that they want to give, and how they want to structure it, and also for yourself, how much you want to build the business, because that will say also, are they potentially going to be your only investor, or are you going to look for further rounds of investment going forward? And you want to make sure that you don't make any mistakes at this stage, such as signing up to the wrong terms, giving them too much equity, etc., for the very first cash into the business. So there's a couple of things around that I would consider first, just before just thinking about the value, which I'm sure you are, but just thinking about the value of the actual business itself. I mean, you would still be on a kind of pre-seed level in terms of the revenue that you have. I'm sure that's growing as well as you say, but it'd be kind of pre-seed, which is generally in the ballpark of like $1 million, 2 million type of thing, probably closer to $1 million for this case in terms of standard valuation. And the importance of those standard valuations is they give you the right amount of equity giving away at this stage and allow you to have future rounds as well within the sort of the framework that future investors would look for. So those are just some things I would think about.
Thank you.
Thank you very much, Carol. Yes, Angelica.
I think that Carol said it all, and the only correct answer in my opinion is it depends. It depends on all those factors. It depends if you are planning to raise in the future. It depends if your revenues are guaranteed, those that you are talking about, to consider for higher valuation. There are too many things to take into consideration to give you a simple answer. Is it A or B? I don't know. It all depends on the details, how much it is, what you think is the current valuation, what you think is the future valuation, what is it based on? Is it based on guaranteed revenues or forecast expectations? Are you going to raise more in the future? Because if you do, then you don't want to go with a down rounds. You want to have a higher valuation, but that higher valuation will have to be backed by higher revenues. Can you achieve them? So a lot of things to think about before this question can be answered.
Jay, thank you very much. And last but not least, Oscar, please.
Hi, I wrote some notes on this. I think, yeah, I agree. Very good question. I would say that the easy answer is that you obviously want the highest valuation because you want less dilution. So that is the first point. And then secondly, you won't get a valuation unless he's ridiculously generous. You won't get a valuation based on future revenue or target revenue. That's not realistic in this market. Even we had a deal this summer in July, even on the kind of contracted ARR, we still would not value the business on that. It would only be pure ARR, i.e. kind of realized revenue. So I don't think you'll get it on future. So yeah, go off today's value, but obviously now I know that it's quite a baby revenue, it will be difficult to get the valuation you want. So you'll have to go off today and you'll have to go off a juicy multiple and hope he's receptive. But I wouldn't pitch it to him when you're having the discussion. Don't pitch it to him saying my revenue will be X this time next year, because he will go, well, it's not that now. And if you have a shocking start to 26, it won't be that. So go off what you've got today and try and have a big multiple on that. That's what I would say.
Thank you very much. And one last advice, Josh, get a lawyer if you do advance in these talks. Do not, I know a lot of people use some really good and very useful platforms. One of which the founder used to join us on a regular basis here on these panels, and they are brilliant, but I still think it's always a good idea to get a lawyer. And when did you incorporate your company, Josh?
The incorporation was actually back in 22 in July, but I went full time with this last March. Yeah, so it's just gone over 3 years.
The reason why I was thinking is that it would really help this investor if you could qualify for SEIS, and I think it's only 2 years now. Can't remember if it's 2 or 3, but double check on that as well, because it could really help them.
3.
Is it 3? Yeah, perfect then. Perfect then. So,
is
yeah,
that? Sorry, go on.
No, go on.
I was going to ask, is that from incorporation date or trading?
Trading.
I believe it's incorporation. Oh, so it's not incorporation then? Okay.
It's trading. You can be dormant for a year and start trading, and that's usually we are looking at the first invoice. That's like the best indicator. But obviously, HMRC says whenever your shop is ready for sale, but there is some interpretation to that. So
brilliant.
Okay, perfect.
Amazing.
Thank you.
Good stuff.
I've got to go, guys. Thank you very much. I've got to go. Thank you, and good questions.
Thank you, Oscar. Thank you very much. And just before I let you go, ladies, do you have any parting words for us? Let's start with Angelica and then Carol.
Oh dear, I don't know. There are so many things. I think make your homework before approaching investors and don't get discouraged when they are harsh. It's part of the game. Business is not easy, and that's probably the easiest part anyway.
Brilliant. Thank you very much. Carol, any thoughts for us before we let you go?
Yeah, I agree. It's a long slog. Business always is. Even the most successful businesses, it's a long slog to build them, etc. as well. So yeah, I would always sort of collect the no's in fundraising, but also very much listen to what the feedback is. I think that the best founders adapt to what they're being told. A really important thing is not to believe that you know more than the investors. I know it can feel like that because it's your passion and it's your baby, your business, but investors see probably 100 versions of what you're building all the time, and they will give you the best advice on the nuance and the reality of what you need to do to make the business successful.
Well, thank you very much, ladies. Huge thanks to everyone that tuned in. I'm afraid we haven't got any more time because we're actually now 3 minutes over the line. But if you do have any more questions, please join us next time. Just before my parting words, a couple of quick things. Please feel free to join us in the future sessions. We run 6 regular sessions helping founders: Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of each month it's UK Startup Law, and third Friday of each month it's UK Startup Finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them and register to any of these sessions via our site, startuptoscaleup.club. Simply go there and find your preferred session. Click join. It's a quick registration that gets you a link to your email, and just save it to your calendar. When you're there, you may also want to join our WhatsApp community, and there's at the top and bottom of that site, there's a link, sorry, an icon rather, a WhatsApp icon. But I've also just posted a WhatsApp link here in our chat on Microsoft Teams. This is specifically for the fundraising Q&A. If you join that, you can connect with other founders, you can discuss fundraising questions and issues that you have, you can connect with our panelists and so on. For those of you on the live streams, please remember that unfortunately we are unable to monitor your questions live. So next time, if you do have any questions, join us here on Microsoft Teams and type your question in the chat ASAP, because like today, as you can see, there's a lot of people who still have questions, but we're only doing this in an hour. So the earlier you drop your question, the better it is. Otherwise, huge thanks to everyone for tuning in. Hopefully we'll see you tomorrow hopefully we'll see you on Monday for Startup Talent Q&A. And as far as my parting words are concerned, just remember the startup journey can be both exciting, but also quite challenging. So try to have some fun and be kind to yourself and everyone else for that matter too. Again, thank you and God bless. Bye-bye for now.